BGM guys, welcome to my space. This is Big Sage Nexus and I'll be your tutor and your mentor on today's video. So basically what we'll be looking out for today is how to mark our order block and for either the support zone and the resistance zone. So stay glued to the video as we'll be diving into that right now. So as we earlier know that in the last video I made, I literally explained the three ways by which markets move, which is the first one, an uptrend movement, which is like this. Then I'm making much of higher highs and higher lows, higher highs and higher lows. I know that when the market makes an higher high, there is something we call break of structure. When the market breaks the last high it's created, that's a break of structure. Like that. Same thing here. It broke this last high. That's another break of structure. Same thing with the last high. It breaks over there. So now, after the break of structure, the market did something. The market went up to this place, break the structure like that was the last high. Then the retracement down here now is what we call at the higher lows, right? And from the higher lows, that's where we get an order block, either a bullish order block or a bearish order block. So on this uptrend movement now, this place I marked out now will be our bullish order block, and I'll show you what an order block looks like. So let's dive into that right now. So let me we have two type of order block, the bullish and the bearish order block. So this like this coming. So let's stay. We're learning a lot today. Then the other one is like this. Okay, this is the first one. The second one is something like this, and the other one should be something like this. Alright, so the first one is the bearish order block, while the second one on the right hand side is the bullish order block. So what makes it bullish is, if you look at the left hand side, you will see that there is a short green candlestick engulfed by a bearish candlestick. That shows that the market is currently bearish and the sellers are taking over. While on the right hand side, we have the bearish candlestick engulfed by the bullish candlestick. You understand? Let me change the color real quick. We have a bearish one, a bearish, engulfed by a green body. While this one, we have a green body engulfed by a red body. So this one engulfed by a red body now is the bearish candles order block, while this one engulfed by a green body is now the bullish order block. So now if you're marking out the order block, you make sure that you're marking out the first break before the larger one that engulfs it. So that's basically how you mark it. Then your stop loss will be above it. The stop loss will be somewhere here, just slight above it. You understand? If you're marking the order block for the bullish, like this is the bullish order block, you mark it out entirely. Hopefully, it's like most time there used to be wicks, so you mark it down to the wick. Then your stop loss also will be below it, the same way that one was above it. So that's just basically how to mark out your order block for either the bearish or bullish market. So now let's go to the real chart to see what that looks like. So if you look at the market, let's say the market has been from this aspect. Let's look it from here to this place, created some kind of a little bit high, then went down to this place, created this, came down to this place. You see? If you noticed, there was an order block around this axis. They already marked it out, but there's another block here. If you see it very well, this candlestick here, this is another block, like that red candlestick. Okay, that's another block. So the market left without picking us because there's an FVG around that zone. There's this gray stuff, that's an FVG. So that one did not pick us. Then we still have the market is still in an uptrend, signaling us that the market is still bullish. So you can see after this one, then we went up, creating more of a lower high here. So this aspect, which is the lower low, and if you notice there was another block there. Let me see. So the market kind of did a change of character there. I would explain that in my next video, which I'll be breaking it down. You can see this little candle engulfed by a bullish candlestick. You understand? You can see that is another block, and I marked it out. The market picked it. From there, you set your entry. Then your stop loss below it. Remember, it's always below it. Then what you're targeting is the last high. That's what I always tell my students. The last high the market created, that's what you're targeting. You can see, you just target it like that, and boom, that was how we got a sweet 9.32 RR. You saw the market went up, and boom, we got it. Same thing applies like that. So you can see the market was in an uptrend. So after that one, then the market, let me bring out my part. So after this other block here, the market went up to this extent, came down, went up again, went up to this extent. Sorry, a little mistake was made. Then came down to this place now. You now notice there was no other block around this zone. Most times I do trade the breaker block. Even though the market didn't respect it, let me mark it out and see. This candlestick here is what I call the breaker block. I'll mark it out entirely. And remember, my stop loss will be, okay, the market respected it. My stop loss will be below. I'll be explaining that in my next video, how to use the breaker and the order block. But today I just want you to just below it. Then what you're targeting now is probably this high that is here, because this one now, there is no clear confirmation yet. So what you're targeting is this high that the market created. That's how I do trade. You target the next high so that you will not be at risk if the market is changing its direction. You can see, and boom, we got the 2RR. Then after that, the market went up. After that switch buy, the market went up to this extent. After this buy, which is the last lower high. Sorry, higher low rather. The market. Sorry, I'm coming. After that, what's wrong? Okay, that's by the way. Let me choose something else. Let me choose it again. So the market came to this extent. That was the higher low, right? The market went up to create another higher high, breaking this last high that it created. Came down to this zone. when it came down to this one, there's another breaker here. Another breaker is here. You can still trade that one. But you after you okay, let's say you pick this trade from this breaker that is here. The market speaks to you. Your SL below it. Instead of the market gets to this extent, instead of the market to break this high that is created here to give us another signal that's going up, the market got to this extent and started falling. So here now becomes our FVG. So on our next video, I'll be talking about directional bias. That will make you know where the market is heading to. So there was an FVG around here. Then the market created, instead of moving up, it came down. It's now break this last low that was created here. That was supposed to make the market like this breakup block that was supposed to make the market go higher, like create another higher high. The market came down. It's break it. After the market break it, then we have a market structure shift entirely at this zone. We have a market structure shift entirely at this level because it already breaks this low that is here. Assuming the market breaks this high now, you can see that there's another block here. We'll have used this other block to continue the buy. But since the market did not and the market breaks it, that automatically become support turn resistance. I'll also be breaking that down in the next video. So make sure you watch my next video and like, subscribe if you're getting any knowledge from this exact video. So now the market changed structure here, and you saw that after that the market started selling. And I think I've come to the end of today's video. Thank you for watching and thank you for staying through. Do have a nice day. Make sure you like, subscribe, and follow this channel for more insightful videos like this.